Welcome to the Stocks with Josh show. Family, hit the like for me. Say hi in the comments. Happy Saturday to you guys. I'm going to be talking about the number one question that I'm getting right now, and probably the most important question that any of us can ask and answer, which is, should we hold off investing right now because stocks are going to be cheaper in 2023 in the upcoming recession? I'm just going to read this question I got from Courageous Norwal 5 over on the Moomoo app. She said, quick question. I started a Roth IRA a few months ago during the paper recession. Should I continue to DCA every week or put a stick in it for the time being until we actually start the true recession next year? All right, I'm going to try to break this down a little bit. I want to talk about a cycle that we're in with the economy that people are dealing with right now. And this morning I read an article that we are at a 15-year high in credit. So people are running up their credit cards. And so what's happened is we obviously saw inflation came out. One of the first things that people do is they start spending their savings. So savings dry up. And as soon as their savings are gone, then things start getting on the credit cards. And then eventually when the credit cards get maxed out, because, every single time you go to the pump, you got to get to where you need to get to. You got to get to work to survive. And then that gas card eventually gets maxed out. And then people begin to deal with delinquency. And then they say, okay, you know what? It's time for me to deal with the fact that I'm making less money, things cost more, so I've got to tighten up, change my lifestyle, change my housing, change my car, change my patterns. And then at that point, people begin to tighten up and the spending slows down. Right now, we're dealing with inflation, but when that cycle gets all the way through, we're going to be dealing with deflation because people are going to stop spending. And then when they stop spending, the cost of goods will have to come down to entice people to spend money. That's the cycle. And right now, we're getting the early flags that are saying credit debt is at a 15-year high. So that's one of the first signs, and we're getting that report right now. And ultimately, when this thing comes into full fruition, that's when inflation just automatically starts dying off very quickly because it's being conquered by deflation. And that's when the Fed will begin to look at those reports and say, okay, I need to cool off on raising the rates. And that the market then will interpret as a pivot and a change. And that's when people will begin to put money back into stocks. You've got to remember that the markets look much further down the road. So by the time we get to the 2023 recession, that's when it's like a bunch of fast cars sitting on a racetrack, and they're holding on to their steering wheels. They got their glasses, their helmets on, their leather gloves, and they're sitting there looking back and forth at all the other investment companies. They're revving their engines. And as soon as they see that pivot, they hit the gas with everything they've got, and they're trying to get ahead of everybody else so that they can ultimately win the investment race. They want to buy at the cheapest price. And so what often happens is that by the time the retail community begins to process their financial situation, they start pumping the brakes on investing. Around that same time is when all the institutional money just comes flooding back in. So I'm going to attempt to answer for you guys and give you a good idea from my point of view. This is just my view. There's other people out there with different views. But here's what I'm looking at right now on the S&P 500, on the SPX. Every single time we come up 10%, we're in a bear market. And every single time we have a bear market rally up 10%, around that time, we begin to pivot and we go down around 18 to 20%. We keep having a bigger move down. Well, right now we're sitting 12% up. We're beginning to see that the markets are getting choppy. For people that are day trading or option trading, it's actually a super profitable time. So right now it's been profitable. I'm able to jump into a trade, see a big move by the end of the day, and jump out and make decent money. But what's very likely going to happen is that we're going to be moving sideways I had said in October that we would have that October would be a bear market killer, that we would run up, and in the second week of November, we would begin to see things fade off. And that's exactly what's played out. Now, we have not hit the technical high that I think the market wants to hit. And so I think that a lot of people have not entered fully into their short positions and they've not begun to fully sell off. But we're starting to see early people take profits. we're going to see this turn around. I'm not so optimistic about a Christmas rally. It could happen, but I'm a little bit more bearish. I believe that as we fade into the end of November, we might see a couple more pushes up on the market, and then I think we're going to see a much bigger leg down, and that next leg down could be the big leg down. And it's at that point that people are going to think, wow, if it's this bad right now, then how bad will it be when we get further into 2023, when we begin to get all the really bad news? I'm going to say that it might not ever be as bad after we hit this next leg down for some of the best companies out there. So I've also been asked, I've done a lot of crypto videos recently, and then sometimes I start going down the crypto road and the stock people are like, hey, don't forget about us. Isn't the name of your show Stocks with Josh? You should change it to Cryptos with Josh. And now I'm probably going to focus a bit more on some stocks. And I was also asked, Josh, could you give us your top 10 stocks to invest in 2023? I think that's a great idea. I've done some deep dives for you guys on some companies that I'm long in right now. Peri Network, P-E-R-I is one of them. It just came up this last week, 32% up from the time that I called it out as a long-term investment play for this current environment and in the recession. It's doing really well, and I think it's going to continue to do well. But I'm going to give you guys, not today, but I'm going to work on giving you guys my top 10 investments in 2023. I'm probably going to do them one at a time as deep dives over the next couple weeks so that I can get them all in before the end of this year, and then we'll do some recap videos. But here's just to really keep this video concise and simple. What I'm imagining is going to happen is that we're going to get off of this bear market rally that we're currently up 12%. We're going to get a final push up. I'll tell you guys in advance, I'm going to be going probably pretty hard on some SQQQ calls and even the stock. And I got kicked out of my TQQQ, but I'm going to go hard on those to ride the next leg down. And then I think it's going to be an ideal environment starting between January and April. Not every company is going to bottom at the exact same time. I said in a recent video that Apple and Tesla are probably going to be two of the last companies to bottom in this coming environment and this downturn and this recession because they're stock market favorites. And so they're going to take a longer time getting to that sell-off. And they're such big companies that when they do sell off, it's enough to really pull down the S&P 500. And that's what you guys will see. But there'll be other companies that have bottomed earlier, and it's the perfect time to be buying them, and you don't want to be unprepared to take a position. I'll just give you another example. Walgreens. I called Walgreens out months ago, not as a buy, but as a potential buy when it got down to $32. I said, I think it was around $40 at the time, and I said, don't buy it, but it's going to be a great recession play in 2023. I said, take a position at $32. And we did get there. We came down right beneath $32. We actually hit around $30. And ever since then, it's been climbing. So that's probably one of the stocks. I do like Walgreens for a recessionary environment, but I want to do a deep dive on that and give you guys fresh entry points. But that's what I wanted to cover today. Yes, there is value right now in raising cash in this environment. But when we get to this next leg down in the market, most people are going to be terrified to invest. And just like the month of June was in the summer, we hit lows on stocks that we've not returned to. We hit lows on cryptos that we never went back to. I talked about Quant. Quant went up 400% from its June lows. And now, even today, it's 174% up from its June lows. There's going to be stocks and cryptos that will not come back to this December or January dip that we're getting ready to enter into. And at that point, you want to be keeping an eye on them. You want to do your homework and your research right now to figure out which companies you really want to focus on. I'm going to quickly talk about the Moomoo investment app. It's a affiliate of mine. There's a link in the top pinned comment. It has a zero cost to use. They actually, if you open and fund your account, they've got the best offer. It's a sort of a Black Friday holiday offer. They're going to enter you into a sweepstakes where you could potentially win $60,000. They've got the free level 2 data. You can trade options. You can short stock. It's licensed, registered, and insured. Your money is safe up to $250,000, and your stocks up to $500,000. So it's a good app. I have the Stocks with Josh page there where I interact and answer questions. This question I talked about today came from the Moomoo app, as well as the Stock Josh fam chat group, where I actually try to jump on every morning at opening bell and interact and share some of the thoughts I have on the day as well as the market. But it's a great app. And here's what I think. If you guys are locked up in trades that you don't intend to let go of, I've done a lot of talk with you guys about stocks that probably are going to go much lower. But if you're committed to them, fine. Keep them, leave them. They'll maybe recover by 2024, 2025, and get ready to invest in a new account where you're not staring at a massive deficit or a loss. So yes, it'd be a great idea to cash up on the Moomoo app, and you could consider doing following me along with the research that I'm going to share on my top 10 stocks to invest in 2023 recession. That's going to be ahead of us. If you guys want to join me and you want to participate in that, then you know you've got to hit the like, the subscribe, and the notification bell to receive that. I hope you guys are having a great weekend. That's all I'm going to share today. As always, peace and blessings, my friends. Take care.